Okay, so we have now the other boxes in a bullish order flow. The other boxes are the bearish candles responsible for the push up. Bearish candle, you know, all this black are bearish candle, right?
Okay.
The golden are the bullish candle. Now the other box are the black candles. That's a bearish candle responsible for the next push up. So I color it red. Okay, so this black candle responsible for the push up to this point. So up to this point. Then there's another one push up here, which was retested. So the next other box, major order box that we are seeing here is this guy. Responsible for the push up to this small region here. Then it came down again. We had another smaller one here. So this small guy here, this small guy, as small as it is powerful enough to push the market up to this point. Okay, and then market came down again, and then we have another order box right here. Responsible for this push up. When market was coming down, it couldn't break this order box to the downside. Couldn't break the other box to the downside, and market pushed up again. And then we have another order box. Another order box right here. Now, if you look at it, this order box you are seeing here, this one, can you see it, sir?
Yeah.
Push the market up to this point. See, this is, and if you look around this area, this is the highest point. Okay, but how do we know it's the highest point before the drop? Market was now started coming back. Now, if this other box was not broken to the downside and the market pushed up again, we know we are seeing a bullish order flow. But at the moment when the last order box, responding for the last push up, is broken to the downside with a full body candle, then we have a breaker. Okay, now have a breaker and a source. The point at which the last order box is broken to the other side. If you look at from down here where we're coming from, all these other boxes were not broken. Even this one, when the market came back, it couldn't break it. You can see it. It couldn't break it. So it still made it a bullish order flow. Bullish order flow. But by the time it came back, touched this last order box, it got broken with a full body candle right here. Okay, the full body candle right here. And then automatically this now turns to a breaker. Once it's broken, it becomes a breaker. We change the color, use color yellow. And then once you have a breaker, then you have automatically have a source. A source is that last push-up candle. The last push-up candle to the upside. And that's this candle here. So this now becomes our source. Colored blue. So that is the end of the bullish order flow. Now, the opposite is the bearish order flow. So we now start having a bearish order flow. And by the time you fully confirm already now that even the market has gone back below the moving average, you can see. Now, for the bearish order flow, you now begin to look at bullish candles responsible for the what? Push down, opposite of what we did here. So this is what? These are first order box to the downside. Okay. Now we begin to follow it like that. Market to come back, will go down. It came back again. It went down. Okay, but yet it has not yet broken the source. So this guy is still holding until this guy came in. It didn't break. This guy is still holding up to. So this order box, this golden candle, yes, this order box, yeah, it's still holding up to, because this is where it pushed the market down to. Market came that not be so until it broke it here. down to this side. So we now have another what? Order box right here. So this is the next order box. Okay, this is the next order box. This one pushed market down to this point, and then we have it came back again, and then it pushed it further down. So we have another order box. So as long as we are in a bearish order box, we have no business buying the market. We have no business buying the market. Okay, so it pushed it down up to this point. Then there's a push up and there's a push down. So the next order box is this guy here. This guy here. How far did this guy push the market? He pushed it down to this point. Okay, pushed it down to this point and pushed up again. And then this guy now pushed down. But if you look at this candle, this candle came down further than this candle. So we have another order box right here. This is another bearish order box. Now, which is the lowest candle? This golden candle or this black candle? Obviously, is the black candle is the lowest candle. That's this candle, which means this golden guy is also an order box because it still pushed the market further down. Okay, though it's very small.
The black candle.
The black candle still came down, Abby.
Yeah.
Okay, I'm back. So this down a bit, but eventually it got broken to the upside. So which means we have a breaker and a source. All of them, both of them is like they are together. Okay, we have a breaker and a source. So this is the source. Why this is the breaker? So, and that is the beginning of a what? A bullish order flow.
Okay.
Breaker. This is the source. Now we are now in a bullish trend. Okay, so we start tracing. Now we have this guy as next bullish order box.
So as you are drawing it, you are including the whole candle, including the wick of the candle, right?
Yes.
Okay.
Yes. So we have another order box. This guy pushed up to this point. We have another order box here, pushed up to this point. So like that, Sha. With your eyes, actually, you can be able to see there. But
Yeah.
So we have this candle. We have this candle. Market did not come down to break it.
Why are you taking that candle? That last black candle, since the price did not attempt to touch the previous order block, I want to believe that the energy of that initial order block will push all the way up.
Energy. Energy. As long as this guy pushed it up to this point, there's a wick. This guy wicked up. He wicked up and then it came down. Price came down.
Okay.
Price came down, and then this guy gave him more. Okay, let's say he gave him more energy to push up. This guy pushed it up. This guy strengthened him to push this. So this one gave him more energy to push up. So it's still.
So that qualifies for another block.
Yes, it is another block.
All right.
And it pushed up to this point, came down, then pushed up to this point, right? Came down.
Yes.
I didn't say this one. I'm looking at this. For me, Please check your. Are you online? Are you on your chat?
Yes.
Was this a black candle inside this broker? I didn't see this. Let me see.
I think there's a breaker there because that black candle, that bearish engulfing candle, broke the small one downwards.
Yeah, I'm coming, sir. I want to check something. Okay. Anyway, this guy got broken, right?
Yeah.
Let's assume this is the only broker we're working with. This guy got broken. It becomes a what?
Yeah.
A breaker. A breaker. And then this is the source. So this will also give us a lesson. This is the source. But by the time the market came back, what happened? It broke the source. So whenever a source is broken, then the source becomes invalid, and as well as the breaker. That means the uptrend still holds. Are you getting me, sir? So since it got broken,
yeah,
so this breaker becomes invalid. So we eventually have to come back to the last box as the other box, so which is this guy. Which is this guy here. But eventually, even this guy, as we currently are now, has been broken. And then our new source is this guy up here. So you can see market tried to break it here, weeks back, but eventually it is fully broken. So Euro USD as we are now is a sell market.
yes.
So Euro USD now is a sell market. And for you to even confirm more, using other tools, if you pull your feed from here to here, you will notice that market is in between the 50 and 61.8 area. So it has a strong retracement level. So I expect this market, even using Fibonacci, to push down at least to 100% or even go further down below this guy. So I have no business buying Euro USD again. Okay, because now we have a new breaker, and so that's what we have now. Okay, so what always happens is on a normal day, when this guy was going up, we expected to come and touch this source and then drop down. Okay, touch the source and then drop down. But you can see that market is obeying 0.8 retracement level. Market can come as long as there is no breaker, we keep selling. Once there's a breaker, whether here or below, that's when we start going up again. As long as there's no breaker to the downside, we are selling Euro USD. Okay, so you can go now to 15 minutes to begin to take your entries. So for example, if you were in this trade and you saw that the market has broken this guy, you can start looking for the possible entry, from 15 minutes. Now the market has hit this place. You can decide to come and retrace. Okay, if it retraces, Can a trade come and touch this source and then drop? Can come and touch the source and then drop, or it continues to go down? So any of these two can happen. So if this market retraces back anywhere from here, I'll be looking for a what? A sell. A sell. The only time I will not look for a sell is if this source gets broken to the upside. This source that we identify, if it gets broken to the upside. So, but if it retraces, most of the time market comes back to retrace. That's what we call a second leg. It can come to form a second leg. That's the M and W, the market maker strategy. Yeah. So anytime from now, it could be from here, it could be from anywhere, to come back, touch this source or this breaker again, as in do a second touch before dropping. Okay, but if we had seen this already before, you can see that it has come to touch, it has come to retest the breaker itself. This was the first time it broke it. It has come to retest it, giving us a bearish breaker on, you can see right here. This was the entry for this. This was the entry. On 15 minutes, you also look for a bearish breaker to go in the direction that you want to go. So this was the bearish breaker right here. So entry, after this guy was broken and came back, the entry to this trade was right here. Was right here. When it broke this guy right here, like enter, place your stop loss around this place, and probably have taken like 89 pips already from the trade. Okay. So, however, markets can decide to push back again. You look for another breaker. The same concept you use on 4 hours, you now use on 15 minutes in the direction of 4 hours. Do you understand?
Correct.
So if the guy is going up right now, I will not enter the trade at all. What I'm looking for is, the only time I can buy this trade is when if it comes up and now breaks above this source. But if it doesn't break above this source, let it be coming up. I'll wait. I'm waiting for a what? A reversal, a breaker to the downside on 15 minutes. I'll enter again for a sell. Okay? Or if it breaks below this, guy, I'll just enter straight, continue the order flow to the downside. So those are two options that I have. Okay. So as it is now, we are in a bearish order flow, and if you have plenty of money, you can just put your stop loss above this source and just enter trade. At least you can do 1-to-1 already. If you are going to take profit around this place, stop loss above the source, you are sure that let the market do anyhow, except it breaks it breaks this source before before you can say, okay, this guy is invalid. But as it is now, this market is a sell. For me, I'm on my personal account. I've done that. I put my stop loss here, and I'm in a sell trade already on Euro USD. On a sell trade already on Euro USD. So no matter what the market wants to do, let it do. My stop loss, at least I'm not risking too much. Once my risk reward is okay, and my account can take that amount of stop loss, then why not? Why not? This was about this on 238 pips. 238 pips. With 0.01, that's about $23. Okay, $23. At least you can make about $30 from the trade. Okay, so, and though I expect that this market is going to come, much more lower. If you look at higher time frame, much more lower. If you look at the weekly, I'm expecting probably the market is going to come down to this point. Come down to this point again. Okay. Come down to this point. So that's if I want to do a long trade. Hold it up to this point, this area. So that's the concept of that's the major concept. Once you can understand this, I think that'll be all. Once you can break down your source and you know the direction of the market, just keep trading the direction of the market. Some people like trading pullback. Well, pullback for me, somebody can be sitting on a time bomb when we are trading pullback. We don't know when the pullback will end. We might say the pullback will touch the last order block before coming down. I may not touch. Okay. This one, when they pull back, it did not touch the last order box. Well, when this one put back, it almost touched the other box. Okay, but it doesn't happen all the time. The momentum can be so strong. Look at this now. Somebody saying trading pullback. When the market was going up, we now started selling. Look at how small it went before the thing pushed up. So there's no point trading pullback when you know the direction. Trade in direction of the trend. That is when you are safe.
It's okay. So this I mean, this is what those market maker videos use 5 hours to explain. I mean, this is very.
You know, this is more like a derivative from it. Do you understand? It's not the market maker basic method itself. This is like develop another strategy, you know, from the major strategy. Let's talk about market maker method. They'll be talking about TDI, high of the day, low of the day, and all that. You know, of course, we use that also. You know, in our own trade also, we look at high of the day, low of the day. For example, this is low of the day. Okay, this is low of the day. You know, we have high of the day. You see, the market came back, almost touched the high of the day before turning around. You can see, market came to high of the day. There was a turnaround here. So if I was trading in this direction, I look at whenever market gets to high of the day and there's a turnaround, I know that I'm sure going to go down. You understand? So it's just they are borrowing the person builds the strategy from the strategy of the market maker. You understand? But this is very simple, straightforward once you understand it.
Okay, so now let's imagine that I was on that, let's say from okay, where the market is now.
Yes.
I have identified my source.
Yes.
I identified the breaker, so I know the source. Now, this is where price is now. I just entered the market now, and I'm able to draw these boxes. Yes. If I want to enter this market, yes, I know we're in a downward order flow or downtrend. So choosing my entry will now be to go down to the 15-minute. Go and wait for where price will come and test the previous order block.
Yes.
Is that correct?
Yes.
In the 15 minutes time frame.
Yes.
Now,
sometimes it may not reach it.
Get there. That's what I wanted to ask. So how do you?
Not all the time.
How do you make sure you don't miss move? Because most of these things didn't really get to the initial.
What is important is forget it getting to this thing. What is important is every time you see if you go on 15 minutes, market is going up now. It will look like a bullish. It will look like a bullish trend on 15 minutes. By the time it comes back here, there will be a breaker around here for 15 minutes for you to go down. If it goes down here, there will be a breaker for the pullback, another breaker to go down on 15 minutes. This is 4 hours. You understand what I'm saying? On 15 minutes, market will be a bearish here, bullish here, bearish here. Do you understand? So this is bullish on 15 minutes. You will get a breaker that will bring it down. A breaker, bring it up.
Okay.
Breaker, bring it down. Breaker, bring it up. Breaker, bring it down. So that's what you'll be looking for. So now that we are bearish here now, what we are looking for is, as the market is going on, there will be a breaker that will bring it up a bit. Okay. I'll not be looking for a breaker that will bring it continue to the downside. So what I'm looking for is a bearish breaker to be continuing my trade on 15 minutes. That's just the concept. Do you get that?
Hello?
Hello, sir. Did you get that?
Yeah. Yes, hello, but I think I got it.
Yeah.
So once we have established the flow in the higher time frame,
Yes.
And we have established that it has an order block. We have established the flow and established the last order block. We
Yes.
go down to the 15-minute time frame, and we now try to identify our order block. So once we get an order block that is in the direction, a breaker in the direction of what was established in 4 hours,
Exactly. Exactly.